What's up, YouTube? It's Todd Horst here with Tasty Tracker. Got another episode in the Small Account Challenge, episode number 25. The account is up to 2918-ish, and so today I closed out three positions. It's up $342 from the last update. So first of all, let's go over to look at SPY. What do you see when you look at SPY? If you're not familiar with SPY, that's the general S&P 500 market index here. And what I see when I look at this is a whole lot of sideways trading. Down here, we were at a low at 293, went the whole way up to 323, then right back down to 298, and now we're sitting at the 312. So for the past month, it's been between 290 and we'll say 325, which is what I've been expecting. But it's just really been going up and down and up and down, and lots of sideways action. When the market's doing this, you can buy some calls and puts, especially buying calls, and get these rips here and make a good amount of money. But you need to make sure that you're timing that correctly both in the purchase and in the sale, obviously. So what happens most times is people get greedy up here and they don't sell, and then they miss their opportunity and it goes right back down. And then right around this time is right when theta is really killing your position, or it's already expired. So yeah, that's what I see when I look at the S&P. And so that leads me to the strategy that I use, especially for a small account, to get your account up to a larger, more sizable account that maybe you can day trade with, you can take some risk with. And once you get to a larger account, you can take that risk that will then pay off. But you need to get a sizable account before you can start taking that risk. If you take that risk right up front, yes, you do have an opportunity potentially to hit a home run and then get a larger account. However, you have more of a chance of blowing up your account, and if you do hit a home run, you're going to think that that's a consistent strategy that you can keep dumping 85% of your account into one position. And we all know how the story ends. Then you blow up your account, even though you hit a home run or two and got your account up from 2K to, whatever, 30K. So the whole point of this strategy is to have something consistent, reliable, generating income for you that you can then turn around and take risk with if you want to play those lottery tickets, or you can continue to snowball this strategy, and it scales very well because it's not time sensitive, both in your entries and your exits, and your time involved in setting everything up. So that's my little spiel for the day on why this strategy makes a whole lot of sense for new users, for people with small accounts, before you get into playing these out of the money calls or puts that you think are going to hit it big, and of course don't. So what happened today? There was a small pop in the market, but primarily it's just the passage of time. So you can see this original Microsoft position that I put on has been open for 31 days. It was at risk of, at one point, of being a loser. So I opened up the second Microsoft position 2 weeks ago to help supplement it. Now, these were at lower strikes, the next set down, and the plan was to close both of these at around 50% of the total position. And so that panned out, and I closed the entire thing for about 180, and that meant that I still made 51 profit on the original position, but the entirety of the second position essentially was closed for zero. I could have done some math here and split this up to what they were closed with actually per position if you want to treat them separately, but from the time I opened up that second position, I was treating them as one position. So anyway, so yeah, the total net on that position is 180. Square also had a bit of a jump this morning. Between that and again theta is enough to close out for around $100 profit after commissions. But neither of these are up an insane amount. So let's go to Square. Loading. Okay, so Square's only up 3% today. Certainly nothing to laugh at. And it is on that pop that I sold. And it has been on a steady incline. This is why I pick good companies, the best in the industry, to make sure that overall they're going up. So certainly going up has helped my position, but I have multiple factors playing in my favor to get these positions to close out. So let's go to Microsoft. Loading. Okay, Microsoft's not even up 1%. Again, it's a higher value stock, so that's nothing to laugh at. But it was on this morning, these pops that between that and theta, just the passage of time is enough for me to be profitable, even though if you look at the past month, it's kind of been I won't say it hasn't been skyrocketing or anything like that. So it's just a play that these big good companies will continue to be big good companies. So anyway, those are the two-ish positions that we closed out today. We can go over here and see the count. Right now it's sitting at 2932. What I say? Yeah, so it's hovering in between 29 and 2950. So all we have left here is DocuSign, Shop, and SPY. SPY I don't have any intentions on closing really anytime soon. I'll definitely look to close the September call once we get into, we'll say probably August, depending on where SPY is at the time. I don't want to let theta rip away my position too much, but if it looks like we'll hit it, which is very possible, we were at, like I said, 325. So to get to 341 is not impossible. I'm not going to hold my breath that we do, but I'll close sometime around in August is the plan for that. So for these two positions, next month we have, or this month we have Shop, and then in September also we have DocuSign. That's it for the current positions that I have on. I have 13 now sitting in cash, which is almost half of my account. As you can imagine, that will put a dent in the earning potential of the positions that I have right now. So on one hand, you want to keep positions on so that way theta is continuing to chip away. But it is important to put positions on down days. And right now, not only is the market up, but most tickers are up as well. So sometimes if the market is up, I'll still put a position on. If a ticker is not up in a big way, like DocuSign, it's only up for 4%, or if it's down, then I don't necessarily care that SPY is up, but it's preferable that SPY be down and the ticker be down. Then I enter in a position that will be more important than just the passage of time, because the stock will go up and that will affect the price more than, like I said, than theta's chipping away at it on a daily basis. Anyway, that's really all I have today. I'll show you the diagram. So the positions I have on are very, very well suited for SPY the whole way down to, what is that, 265, 270, somewhere in that range, whole standard deviation down. So anyway, if you have any questions, let me know and talk to you next time.